Hello students, welcome to AffairsCloud. My name is Shashmita. We have an app by the name CareersCloud which you can go and download through the Play Store. Once you have downloaded the application, you will easily be able to log in using your Gmail ID. And once you have logged in, you will be redirected to this page where you will be getting this URL. And there will be option for home, all courses, my courses and doubt section in this application. You will be getting multiple PDFs, multiple content on daily basis that will be enhancing your learning. Under Crack Current Affairs, you will be able to see multiple options. First one is Current Affairs English. We upload the day-to-day basis news in the English format. And apart from English PDF, we also provide them in Hindi format. And this banking awareness, we upload a PDF every month. So this PDF will contain the banking news, banking and the finance news of that respective month. And Current Affairs Exam PDF will have two categories. One is that most important news of that particular month will be uploaded in this Current Affairs Exam PDF. And also Exam Perspective PDF will also be uploaded. And next is Special CA. This will contain Union Budget, Economic Survey, and also the most important events that had taken place globally as well as nationally. And next most important is topic wise. So the entire news of that particular month will be segregated into different topics. And in order to recollect whatever you've read, we also provide you with topic wise quizzes. Apart from that, we also provide state current affairs. Now, here if you see, we provide you with the day-to-day PDF, and this we provide you with the weekly PDF. So that particular week news will be compiled into a PDF and in question and answer format in English, and will be uploaded here. And to enhance your learning, you can also, to enhance and strengthen your learning, you can also attend the quiz. Here we provide you with the entire news of that particular week. But here we take the top 60 most important news and we upload it in this PDF in question and answer format. Apart from weekly, we also provide you the monthly ones. This PDF will contain detailed view of that particular month news, and this will have a brief format of the same news. This will be in the form of a question and answer format, and this will have the top 100 question and answer of that particular month. We also provide you with the PIB news on a day-to-day basis, which you can go and read in these particular tabs. Apart from that, we also provide the Union Budget and Economic Survey. You can also attend you can read after reading the PDF. You can also go and attend the quiz. This is available in the Special CA category. We also provide state level current affairs. So this will be very helpful for students who are preparing for state level exams. For example, if you are preparing for Tamil Nadu state level exams, then you can click this tab and you will be able to see all the current affairs or news related to Tamil Nadu. Apart from that, we also provide PDF from the exam perspective. Suppose you are preparing for RBI assistant mains, then this tab will contain 5 to 6 months of current affairs, which has high probability of being asked in RBI assistant mains. Similarly for SBI PO, RRB PO, clerk mains, all these are being given under this section. And also we provide separate content-wise, topic-wise current affairs like national affairs, government schemes, international affairs, banking and finance, economy and businesses, MOUs and committees and meetings. All these different types of news are segregated in these particular categories. Hello students, welcome to our new initiative. In this initiative, we will be uploading the weekly current affairs on banking and finance section. So this will be uploaded on every Monday. And so on the whole, per month, you will have totally 4 videos related to this topic. And apart from just providing you with the banking and finance news, we also provide you the conceptual explanation so that this will enhance and also strengthen your knowledge about these topics. Today, we will be covering August 1st week banking and finance awareness news. Moving to the first news, RBI introduced new PCA framework for the urban cooperative banks. Now, what is this PCA framework? It is prompt corrective actions. So this is a framework to monitor the financial stability and financial health of the banks and NBFCs. So currently, if you see, the PCA framework is applicable only for banks and NBFC. So in the NBFC, if you see, this framework was introduced in 2021, and from 2022, it was applicable to the NBFC. So what do they actually do? This prompt corrective action, this framework will monitor certain parameters or the metrics of the banks. So certain financial parameters of the banks will be monitored, like capital adequacy ratio and profitability, NPA, all these certain parameters will be monitored, and there will be a limit set on for each and every parameter. If that has been breached, then this prompt corrective actions will be applied on the certain banks. So when this prompt corrective actions have been implemented on certain banks, then there will be certain restrictions applied by RBI on such banks until and unless they come out of that financial unsound but that until and unless they come out of that financial situation. So they have to be financially healthy and stable and strong. Until then, RBI will use that restrictions over them, or will impose the restrictions on these banks and NBFCs. So this is mainly to ensure that the financial system, that is the banks, NBFCs, everything are financially healthy and stable in the country, and that is why this PCA framework was introduced. Now they are planning to introduce, now they have introduced this PCA framework for the urban cooperative banks as well. So if you see, to provide more focus on larger urban cooperative banks that require more intense monitoring by optimum utilization of the supervisory resources, this provisions will be effective from 1st April 2025. So from the next financial year, this provision will be applicable for the urban cooperative banks. So if this PCA is going to be applicable only from next year, then was there no other actions, or was there no other following up of the urban cooperative bank? No, nothing like that. So now if you see, the supervisory action framework is being used in place of this PCA. So currently the supervisory action framework is used to supervise the urban cooperative banks, to monitor the urban cooperative banks. So just similar to the PCA. So this now will be replaced by the PCA. So this will replace the supervisory action framework, that is PCA will replace the supervisory action framework which had been in place since January 2020. So at present, if you see, there are 1500 urban cooperative banks in the country, and we know that the RBI has classified urban cooperative banks into 4 categories. So those are tier 1, 2, 3 and 4. So tier 1 will be UCBs with deposit size less than 100 crore. Tier 2 it is between 100 and 1000, and tier 3 it is between 1000 and 10,000, and tier 4 it is when the deposit size is more than 10,000, then it comes under tier 4 category. So if you see, now this PCA framework will be applicable only for these 3 tiers, that is tier 2, tier 3 and tier 4. For tier 1, this PCA will not be applicable, and this will be still monitored again, under the supervisory action framework only. So this will still be applicable to tier 1 UCB, but not for tier 2, tier 3 and tier 4. For this, supervisory action framework will not be applicable, but for tier 1, this supervisory action framework will still be applicable. So if you see, tier 1 UCBs have been excluded from the PCA framework for the present. However, they should continue to be subjected to enhanced monitoring under the extant supervisory framework. So if you see, in the PCA framework eliminates the limit of 25,000 on capital expenditure restrictions that was imposed under the supervisory action framework. So if you see, under the supervisory action framework, there was a restriction that the urban cooperatives bank should not spend more than 25,000. But now this PCA framework has removed this limit, that is 25,000. The limit is removed, but there will be a limit set, but the 25,000 amount limit has been removed. So the supervisors to decide the limit depending upon the assessment of each entity. So it previously, if you see, 25,000 was the limit on capital expenditure for all entities, irrespective of the position of each and every entities. It was the same for all the entities which were not performing well. Now supervisor has told that this 25,000 amount on the capital expenditure, this fixed amount will be removed, and the amount on the capital expenditure, the limit on the capital expenditure will be assessed or will be calculated based on each entity. So however that particular entity is, whatever the situation of that entity is, depending upon that, the limit will be calculated by the supervisors. Now, what are the key areas for monitoring the financial health of the UCBs? The 3 areas are capital, asset quality and profitability. So if there is any breach of the following indicators, then this invocation of PCA happens. That is, prompt corrective action is invocated if there is any breach of any of the indicators. Now, capital is nothing but the capital adequacy ratio that every bank or NBFC or cooperative banks, they have to maintain. So if you see, the capital adequacy ratio for tier 1, it is 9%, and tier 1 does not come under the PCA framework. So tier 2, tier 3 and tier 4, it is 12% by March 2026. But now currently it is 10% by 31st March 2024, and it has to be 11% by March 31, 2025. So at present stage, it has to maintain a CRAR of 10%, and by 2026, it has to maintain a CRAR of 12%. Now, what is this? So CRAR, minimum regulatory requirement as applicable. So now as on date, it is 2024 has only crossed. 31st March 2024 has only crossed. So they have to maintain at least 10% of the CRAR. Then only they have met the limit, they have not breached it. Now, in case if they have breached the limit, if in case they have not kept 10% as CRAR, then up to 250 basis point below the indicator, that is, there is a shortage of 250 basis point, which means it is between 7.5 to 10. So instead of keeping 10%, the CRAR is now between 7.5 and 10%, that is shortage of 250 basis point, then it falls under risk threshold 1. Next, in case of risk threshold 2, if it is more than 250 basis point but not exceeding 400 basis point, which means it is between 6 and 7.5, that is it is below 7.5 but more than 6, then it falls under risk threshold 2, and in case of risk threshold 3, in excess of 400 basis point, that is CRAR is lesser than 6%, then it falls under risk threshold 3. Similarly, in case of asset quality, the indicator is net non-performing asset. So if the net non-performing asset is greater than 6% but lesser than 9%, it comes to threshold 1. In case of 2, it is greater than 9% and lesser than 12%, and in case of risk threshold 3, it is greater than 12%. The third parameter is profitability. Here the indicator is net profit. So it will come under the risk threshold, or it will come under the PCA if it incurs losses during the 2 consecutive years. So if there is loss for 2 consecutive years, then it will come under the PCA action framework. Now, so remember there are 3 thresholds. For CRAR, it is 250 basis point. Here 250 to 400. Here it is greater than, shortage is more than 400 basis point. Next is net NPA. It is between 6 to 9% for first threshold. Next it is 9 to 12, and the last one it is more than 12. And the last profitability is 2 consecutive years of losses. Then it comes under the PCA framework. So these are the parameters and these are the indicators. Now, so they have breached the limit. Now what will happen? What will the regulator do? In case they have breached the limit, then the implications are, here the RBI, it can impose restrictions on UCB from raising capital from the existing members and issuing equity or other capital instruments. Next is that the RBI will also stop the UCB from giving dividends. So it will tell that you don't have money, you are not following the financial metrics properly, you are financially unhealthy, so you should not give dividends to the shareholders, or you should not also make any donations. Apart from that, there will also be a restriction set on the capital expenditure. But other than the technology upgradation. So on technology upgradation, there will not be any restriction. Other than that, there will be a capital expenditure restriction on the UCB. And also there will be a restriction on the number of branches. So you cannot expand or you cannot increase branches or set up new branches unless you have made yourself financially healthy. So these are the various implications. And apart from that, even after taking all these many steps and these many restrictions, even after trying a lot of ways to improve the capacity of the UCB, if UCB fails to improve itself, then in that case, UCB, if steps taken by the UCB fails to yield the desired result, then the UCB will be required to explore merger options with another bank or converting itself into a credit society. So these are the things. So even after taking a lot of actions, a lot of improvements have not been seen, it is still not able to come up to the mark, then it has to either merge with other bank or convert itself into a credit society. So these are the implications if the prompt corrective actions has been imposed on the UCB. So next news is that RBI selected 5 firms under the 5th cohort of the regulated sandbox on the team neutral. So what is this regulatory sandbox? This was established in August 2019 based on the recommendation of the working group that was set by the Financial Stability and Development Council subcommittee. So what happens in this regulatory sandbox? Live testing of new products or services in a controlled or test regulatory environment. Through this, field tests are conducted on the advantage and drawbacks of the new financial innovation. So suppose you want to bring new products to the market. So first you have to test it, right? So similarly, if you want to bring any new product, in case of software, you have a lot of testing. So first you will have maybe QAT, QA, then UAT, XAT, so many testing phases will be there. Then only you will bring it to the production phase. Similarly, in this case also, you cannot directly launch the product in the market because you don't know the repercussions of it. So what you have to do that in a controlled environment, you have to first test the product, and then only you will understand what are the disadvantages or the advantages or the consequences of this product. All this can be analyzed only after proper testing of the product. So this regulatory sandbox provides you that environment where you can test this new product or service. So the target applicants for the entry to the regulatory sandbox are fintech companies. So who all can use this environment to test their products? They are fintech companies, startups, banks, financial institutions, and any other company and limited liability partnerships and partnership firms. So these are the applicants who can test their products or services in this regulatory sandbox environment. So the RBI sandbox operates on a thematic cohort basis. So now we saw that the fifth cohort is that neutral. So if this is the fifth, then there should have been 4 more cohorts, right, previously. So these are the 4 cohorts. So each cohort focuses on a specific area. So the previous 4 cohorts under the regulatory sandbox are: first is retail payment, second is cross-border payment, third is MSME lending, and the fourth is the prevention and mitigation of financial frauds. So these are the 4 cohorts focusing each on a specific area. Now RBI, it has selected 5 entities out of the 22 applications for the 5th cohort of the regulatory sandbox, that is neutral. So 22 applications have been received by RBI, and from that 22 it has selected 5 entities for this 5th cohort, that is the team is neutral. So what are those 5? So first one is that Connecting Dot Consultancy Private Limited, Kolkata, West Bengal. So this company, it has provided solution which will enhance the loan default protection. So before we have given loan to that person. So before that loan turns into an NPA, this solution will be able to predict it, and the accuracy level is also very high. So this its solution enhances loan default protection accuracy by categorizing portfolio into high, medium, and low risk. Next is that Epifi Technologies Private Limited, Bangalore, Karnataka. So its solution facilitates digital NRE and NRO account opening via video KYC and identity validation, streamlining the process for NREs. So if you see now, if an NRE and NRO account should be opened, the customer has to visit the branch. He cannot do it by sitting in abroad. So this will help him to open the account digitally. He doesn't have to visit the branch specifically for this. He can sit anywhere in the world and open this account. This solution has been provided by this Epifi technology. Third one is Finac Technologies Private Limited, Noida, Uttar Pradesh. Here, what it says is MSMEs in large enterprises supply chain, they can convert the receivables into blockchain tokens. And then these MSMEs can redeem these tokens for credits from banks or NBFCs. So this will make credit more accessible and affordable for smaller MSMEs, sorry. So MSMEs, you know that when they sell a product, obviously they will not get some MSMEs who will not get the money immediately, right? Because buyers may not give the money immediately. So in that case, there will be a little bit of duration. So in that case, it will have the receivables. So this MSME, it can convert the MSME receivables into blockchain tokens, and then it can redeem these tokens for credit from banks or NBFCs. Next one is Indian Bank's Digital Infrastructure Company Private Limited, Mumbai, Maharashtra. So this is also related to MSME. So here MSME is a supply chain to access affordable finance linked to their value addition. Here also they have provided a solution for the MSME to provide an easy and affordable and a faster finance access. The last one is Scienzy Technologies Private Limited, Bangalore, Karnataka. So here it has provided a video KYC solution. It enables the user to complete the KYC independently, reducing the timing and also improving the success rate and ensuring a seamless experience for both customers and regulated entities. So this It will, so when you do a video KYC, generally you need a assistant, right? Either from the bank side or something, they have to assist you. But here this SignZ enables you to do the entire KYC independently, and the timeline will also reduce according to this solution, and success rate also increases, because when you nowadays there are video KYC account opening, that is you don't have to visit the bank and you can do video KYC account opening for normal savings account, that is for RI, resident individual savings account. These options are available. But at times, there will the process will go. Sometimes it may get stuck. That time you need an interference by the employee, by the bank employee, or sometimes the process would have been completed, but at last the account number would not be generated. So in that case, you have to go to the bank and again open the account. So there are a lot of failures also happening in this KYC account opening. So in that case, this SignZ provides a solution that will help in a complete independent KYC and also reduce the timeline and improve the success rate also. So these are the 5 entities, and these are the 5 solutions that have been provided by these entities. So remember, it is connecting dot consultancy from the West Bengal. It provided solution regarding loan default protection. Next is Epifee Technology. It is regarding digital NRE NRO account opening. Next is Finac Technology. This is about MSME receivables getting converted into tokens and then getting credit from the NBFCs or bank. Fourth is Indian Bank's digital infrastructure company is also related to MSME in a supply chain having accessible to affordable finance. The last one, SignZ Technology, is users completing the KYC independently and also reduce time and improve success rate. So these are the 5 entities. Do remember them. This is very, very, very important. So the selected entities will commence testing of their products on solution from August 2024. So from August, that is from this month onwards, the testing will start. We have launched a new course called Static Banking Awareness course. Now this course will be helpful for students who are preparing for the banking exams and for the regulatory body exams. And also recently you would have seen Paytm Bank in news frequently. So when an aspirant reads this news, he would have ample number of questions like what is a payment bank, what are the norms for it, and which is the committee that has launched it. So this Static Banking Awareness course lays a foundation to the current banking and finance news. Now you have to download our AffairsCloud to access this course. Once you have logged into our app, you can go and click this all courses icon, and then you'll be redirected to this page. In this, you have to go and click the Static Banking Awareness course, and under the details tab, you will be able to see a brief about this course. And under the part tab, it will contain all the contents, all the topics of the contents that are currently available in this course. We are working on this continuously, and this will be completed within 2 months. Under the free tab, you can go and access one content, that is the origin and development content, for free. You can go and read this content and have an idea about this course. After reading this content, do attend the quiz that is also available under the same tab. Now, our team has allocated ample amount of time and resources to curate this content. We have created this content from various books and from various verified websites. Our content is better than any book that is available in the market. This is because we update this content on a dynamic basis. For example, there are currently 39 DRTs that are available in the country now. In future, if one more DRT is created or added, then it would become 40. So we would update this content on a dynamic basis. But in case of books, you have to wait for the next publication for this updated content. Nowadays, a lot of practical questions have been asked in the banking exams. For example, how many public sector banks are available on the stock exchange? Which is the payment bank that is being listed on the stock exchange? So we try to cover as many practical questions as possible in this course. Apart from this, we also provide you a question bank that will contain around 3000 questions and the previous year questions along with it. We also have a dedicated tab that will release the important RBI notification and the frequent news released by the RBI. You can use this code B15 to avail 15% discount. This is one of the highest discounts that we have offered until now. So do avail this code B15 while you purchase the course. Next news. So next news is about RBI's report on currency and finance 2023-2024. The theme for this year's report is India's digital revolution. So according to this RCF report, that is Report on Currency and Finance 2023 and 24. India's digital economy currently at 10% of the GDP and is expected to double to 20% by 2026. Now, if you see this report, it is published annually by the Reserve Bank of India. This report will give insight about the currency trends, the inflation rate and the financial stability of the economy. All these details will be present in this report. Apart from that, it also highlights the advantages, opportunities and challenges that are associated with the digitization and digital technologies, especially which are related to the financial sector. So these all details, what are the advantages, opportunities and what are the challenges, all this is contained in this report on currency and finance released by RBI. First one, India's digital economy poised to constitute 1/5 of the GDP by 2026. That is, the report by RBI, it has projected that the increased use of digitization of the financial market and payment system. You know that a lot of people are now accessing stock market. A lot of people are now using UPI, mobile banking services. So all this has increased tremendously. So this now, if you see, it will constitute around 20% of the GDP by 2026, and which now currently accounts for the 1/10 of the GDP. Similarly, if you see the cost per gigabyte of data consumed, it is the lowest in India. So cost per gigabyte of data consumed is the lowest globally, and the cost here in India is just 13 rupees 32 paisa, that is 0.16 per GB. And India also has the highest mobile data consumption in the world, with an average per user per month consumption is around 24.1 GB. So remember all these data, it is very, very important because they might ask this data for the upcoming banking exams, because this is one of the important reports of RBI. So the average cost is 13 rupees 32 paisa, and then the monthly consumption is 24.1 GB. Next is the digital payment clock 50% volume growth. So digital payment, it has seen a compounded on annual growth rate of 50% in volume and 10% in value terms the last 7 years, that is between 2017-18 and 2023-24. So between this year, we saw an increase of 15% in volume terms and 10% in value terms. And if you see UPI, as expected, UPI, it has emerged as the preferred method of retail payment with around 79.6% in total volumes of retail payment. So there are various retail payments available apart from UPI. So if you see what else, IMPS, NEFT, RTGS. So these are the various other online retail payments available. In that, if you see, out of these so many options available, UPI, it has contributed, or it has emerged as the 80%. Almost it has a share of 80% among the volume of the retail payments. UPI, it has seen a 10-fold growth in transactions by volume over the past 4 years. That is, it has increased from 12.5 billion transactions in 2019-20 to 131 billion transactions in 2024. So from 12.5 billion, it has grown to 131 billion, which is very, very huge. Next is that currently, if you see, the UPI is recording a nearly 14 billion transactions per month. And next, in terms of value, so we saw it here that in terms of volume, it contributes around 80% share in the retail payment. But in case of value, in terms of value, the NEFT transactions, they have the highest share, that is around 49.4%, and followed by UPI 25%. So in case of volume, it is UPI 80%, but in case of value, it is NEFT around 50%, and UPI only contributes 25% in case of value. So these are the data that has to be remembered. So also remember this, that from 12.5 billion, it has increased to 131 billion. This data is also important, just in 4 years. Next is, India is set to lead global labor supply, remittance to hit 160 billion. We know that in financial year 2023, we have received around 115 billion. So we are the highest inward remittance in the country itself. So we hold the first rank in the inward remittance. We receive the highest inward remittance in the globe. So India is expected to be the world's leading supplier of labor, which will increase the remittance to around 116 billion in 2029 from 115 billion in 2023. So if you see, India accounts around 13.5% of the world's total remittance, making it the highest remittance recipient in the world. And the ratio of the remittance to GDP, it has increased from 2.8% to 3.2% in 2023. So the main point to remember here is, it is currently at 115 billion. It is expected to increase to 160 billion in 2029. This is the first point. Second is the total contribution of India's remittance to the overall world's remittance is 13.5%. Third data is that it has remittance to GDP. It has increased from 2.8% to 3.2%. So these are the main points to be remembered. 115 billion, 160 billion, 13.5%. Then from 2.8% it has increased to 3.2%. Next is that informal finance still thriving in rural India. So though this financial inclusion is playing a huge role, though RBI is taking a lot of methods, so that a lot of steps for this financial inclusion, for penetration of bank accounts into the remote areas and all, but still there are a lot of people who are dependent on informal finance. So why are they dependent on informal finance when there is formal finance available? So the main reason is that they lack the necessary information that financial institutions need to access. So maybe they haven't taken any loan before, so the proper credit history may not be available. They may not have proper loan documents. So these are the various reasons that is stopping them from availing formal finance. And so a lot of people, especially the lower income households people, they are mostly taking money or borrowing money from the informal sector. So among the total outstanding loans for rural households, 31% is sourced from the informal lenders, and these are particularly high among the lowest income group. So it is around 31% from the informal lenders. Next is that cross-selling and embedded finance models may raise anti-competition concern. Now, what is this embedded finance? Embedded finance is the integration of the financial services into non-financial products or services. So, embedded finance, it brings financial services to the customers where they are, even when they are at the non-financial service providers. Now, let me explain this with an example. So, suppose you are going to a car dealer. So, there you are purchasing a car. So, this is a non-financial product, right? So you are at a non-financial service provider, but when you buy a car, it is a must that you have to buy an insurance. The dealer will tell that you have to buy an insurance. Either you can buy the insurance from the person, from the insurance company that is in tie-up with the dealer, or you can buy any insurance from the online, whichever insurance company you prefer. So when you buy a car, which is a non-financial product, you are supposed to buy, or you are forced to buy, an insurance product also. As per rule, you have to buy an insurance. So here insurance is a financial product. So this is what is embedded finance. When you are going to buy a non-financial product, but there is an embedded financial product associated with it. That is, it is the integration of the financial services into the non-financial product or services. This is what is called as embedded finance, and it is said that India is amongst the top 10 countries in terms of embedded finance revenue, and it is expected to expand at a compounded annual growth rate of 30% over 2022 to 29, and it is expected to reach around 21 billion in 2029. So remember, it is expected to grow at 30%, and then it is expected to reach 21 billion in 2029. This is nothing but the embedded finance, and the cross-selling is also expected to increase in due term. So what is this cross-selling? So when you have visited a bank, maybe to open an FD. There you visit the bank and then you tell the branch manager that you want to open an FD. The branch manager tells like, what is the purpose? He will ask you that what is the purpose of opening FD. You will tell that because I want to have good returns and I want to utilize this money properly. Then the bank manager might suggest you to put in mutual fund because they give you better returns. He will tell his options. then you will get interested. Then you will find, okay, mutual funds are better than FD. Why can't I invest in mutual fund? Then you decide yourself that you will invest in mutual fund, and then you invest in mutual fund. So here a cross-selling happens. That is, here the bank manager sells a mutual fund product. So this is a product outside the banking. This is a financial product, but it is outside the banking sector. So this is nothing but cross-selling. So cross-selling is also expected to increase tremendously in the upcoming years in India. So, but the major disadvantage of digitization are the dark patterns where the customers are tricked into making decisions against their interest. So this is also there. Sometimes, when you read when you buy any insurance policy or something, there will be a small disclaimer in the between. At the end it will be very small. So the other font, the other details and all will be in the 20 or 25 font size, but that alone will be there only in the font size of 8 or 7, which will not even be visible. So this is all a trick to missell also. So this digitization will increase that dark pattern, and it will trick the customers into making decision against their interest. This disadvantage is also possible in the upcoming time. So next news is about InsurTech startup Coverzy receiving license from IRDAI. So Insurance Regulatory and Development Authority of India has provided the direct broking general license to Coverzy, which is a Bengaluru based insurance tech startup. So what is this insurance broker? So insurance broker is a person registered by the authority, that is here in this case this authority is IRDAI, as a direct broker or a reinsurance broker or a composite broker. So basically insurance broker, what they do is that if they go and meet the customers, or the customers come and meet them digitally or physically, any way, and so the customer will tell their needs. So what kind of needs they have. So according to their needs, insurance broker will suggest various insurance policies to them. So insurance broker, they will be tied to multiple insurance companies, and from them the best policies will be advised or will be provided to the customer to choose. So this is the work of an insurance broker. So if you see, there are 5 types of insurance broker. They are direct broker life. Here direct broker life is related to the risk involved in life. If in case of death of an individual, then an insurance amount will be provided, that is term insurance. All this will come under direct broker life. Next is direct broker general. This will include home loan insurance, home insurance. Like when you buy a home, there will be an insurance for that house also. You have to have an insurance for that house, right? That one. And also the vehicle insurance. So all this will come under direct broker general. The third one is direct broker life and general, where the broker can provide both the services, that is life and general. Fourth one is reinsurance broker. So in this case of reinsurance, the insured client is an insurance company. See, suppose there is a company A. So they have insured something, some product or some activity with insurance company B. Now this insurance company is worried that this product is very risky, or this company is very risky. So what in future if this mishap happens, any mishap happens, and if I am not able to provide the insurance amount. So in that case, in order to reduce the insurance company's risk, it reinsures the same risk with another insurance company. This is called as reinsurance. So, in order to reduce the risk of the insurance company of that particular, only in this case of this company A risk, this insurance company reinsures itself. This is called as reinsurance. So, in the case of reinsurance, the insured client is an insurance company looking to acquire protection or reinsurance from another large insurance company for a specific risk or a class of risk. The fifth one is the composite broker. So this arranges insurance and reinsurance for clients. So if you see, this composite means they can provide this direct broker facilities, that is life and general, and also they can also provide this reinsurance facilities. So if they can provide both these facilities, then they are called as composite broker. So it arranges insurance and reinsurance for clients with insurers and reinsurers. This is a composite broker. So these are the 5 types of insurance broker, and this Coverzy has acquired direct broking general license from the IRDAI. So IRDAI, if you see, the headquarter is in Hyderabad. So what is the minimum capital requirement for these insurance broker? So if in case of direct broker, the minimum capital requirement is 75 lakhs, and reinsurance broker it is 4 lakhs, and in case of composite broker it is 5 crore. So remember these, it is 75 lakhs, 4 crore and then 5 crore. So next news is that RBI has cancelled the license of Mahabhairav Cooperative Urban Bank Limited, which is located in Tezpur, Assam. Now, so why has it been cancelled? It is because of inadequate capital and earning prospects, non-compliance with various sections of the Banking Regulation Act, and inability to pay the current deposits in full. And also in looking into the public interest, it was advised that not to run this bank in future. So these are the various reasons. The main takeaway from this is that RBI has cancelled the Mahabhairav Cooperative Bank, which is located in Tezpur, Assam. This is the main thing that has to be taken from this news. The next news is that RBI imposes monetary penalties on 3 payment system operators. So, you know that recently in the annual report was released 1 or 2 months back. In that, RBI has mentioned the amount of penalty collected by RBI during the financial year 2024. Now mention the amount of penalty that has been collected by RBI during financial year 2024. I will give you option 88 crores, 86 crores, 85 crores and then 87 crores. So among this, tell me that how much money has been collected as penalty during financial year 2024. So the 3 system operators are Manappuram Finance Limited. It was fined 41 lakhs for non-compliance with certain provisions of KYC. And then Ola Financial Services Private Limited. It was fined 87.55 lakh for non-adhering to KYC directions, and also certain deficiencies have been observed under the Payment and Settlement Act. And the last one is Visa Worldwide Private Limited. It was fined 2.4 crores. So this is a very huge amount. So do remember the names. It is Manappuram, then Ola Finance and then Visa World. So in case of Visa World, they had operated or implemented a payment authentication solution without proper clearance from the RBI. So this is the reason why RBI had fined Visa World Private Limited with a hefty amount of 2.4 crores. So next news is that Government of India and Asian Development Bank has signed a loan agreement worth rupees $200 million. So this amount will be used to enhance the solid waste management in 100 cities across 8 states. So this will support the objectives of Swachh Bharat Mission Urban 2.0. So what is the objective of Swachh Bharat Mission Urban 2.0? It is to make all Indian cities garbage free by 2026. So apart from this $200 billion that the ADB will provide, it will also provide an additional technical assistance worth of $3.15 million. So this will be used to help the financial management, monitoring and the evaluation, like whether the cities are performing or not, whether they to monitor them, also to evaluate them. This money will be used. So $200 million, and then apart from that $3.15 million as technical assistance. And remember that the target date or deadline date for Swachh Bharat Urban Mission, Swachh Bharat Mission Urban 2.0 is, as of now, it is 2026. So remember all these points. The next is that Tata Power Solar Systems. It is a wholly owned subsidiary of Tata Power Renewable Energies. It has collaborated with Bank of India to provide loans for rooftop solar installation and EV charging station. So the two purpose for this loan will be rooftop solar installation and EV charging station. For that, these two people have joined hands, that is Tata Power Solar Systems and Bank of India. So how will this be provided? So if you see, there are 3 types in this case. The first one is for installation up to 3 kilowatt. You know that in 2024, this Pradhan Mantri Surya Ghar Muft Bijli Yojana was introduced by the Prime Minister. This is the objective is to provide 1 crore rooftop solar to the households. So here, if you see, up to 3 kilowatt, the residential customers, they can avail a loan of 2 lakh. And the interest rate will be 7.1%, and the customer has to provide a minimum margin of 5%. So remember, up to 3 kilowatt, the loan amount is up to 2 lakh and the interest rate is up to 7.10%, and the margin that the customer has to provide is 5%, and the maximum tenure of the loan is 10 years. So this is for the first type. The second is for installation of solar panel from 3 kilowatt to 10 kilowatt. Here the loan amount is up to 6 lakhs. And here the interest rate will range from 8.3 to 10.25, but the margin remains the same, that is 5%. And here also the tenure also remains the same, that is 10 years. So here the difference is the interest rate and the loan amount. For up to 3 kilowatt it is only 2 lakhs. For up to 10 kilowatt it is 6 lakh. The last one is for the MSME, that is Udyam registered MSME. They can avail a loan up to 30 crore. The interest rate will be 9.35% and the margin money is 15%. So apart from this interest rate and this 30 crore amount and the 9.35 interest rate per annum, they will also be, they can also, that is the MSME can also avail the benefits under GIFT scheme, that is Green Investment and Financing for Transformation scheme. So this scheme was introduced by the MSME minister. This is to support the MSME sectors or MSME customers who are adopting green technologies. So who are undergoing green transformation or renewable energies or green technologies, in order to encourage them, this scheme was introduced. So in case of this gift scheme, if you see, the MSME or the ministry, it will provide a interest subvention of about 2%. So 2% interest subvention will be provided per annum for a maximum of 5 years and on a term loan of up to 2 crores. So up to the maximum amount of 2 crores, an interest subvention of 2% will be provided for 5 years. This is this gift scheme. So remember, the first part is up to 3 kilowatts. It is 2 lakhs in amount and the interest is 7.10. Margin money is 5%. Here 3 to 10 kilowatts, 6 lakhs. Interest rate is 8.3 to 10.25 and the last one is 30 crore. Remember the amount 30 crore and margin money in this case is 15%. Apart from that, they will also be given an incentive under this interest subvention under this Green Investment and Financing for Transformation scheme, and interest subvention of 2% for 5 years and maximum term loan amount should be 2 crores. So up to this 2% interest subvention will be provided by the ministry. So if you see PM Surya Ghar Muft Bijli Yojana, it was launched in February 2024 with a total budget of 75,021 crores to provide free electricity of how many units per month to 1 crore households in India through rooftop solar setup. So tell me in the comment that how many units per month to 1 crore households. If you want, I can give you the option also. It is 150 or 200 or 300, 350 or 500. So tell me which is the right one in the comment section. So next question is that SEBI launches AI chatbot Seva for the investors. So this full form is SEBI's virtual assistant to assist the investors. So if you see, there are AI chatbot in lot of platforms, not just in SEBI. In case of, you see, even in Swiggy also, if you want to contact the customer, first there will be an AI chatbot. So first the basic questions that will be answered by the AI chatbot, and when it goes deeper, then a person or assistant will interfere. So that is the reason, or that is the purpose of the AI chatbot nowadays. So if you see this chatbot, it currently provides answers regarding the securities market, master circulars, grievance redressal. All these answers can be provided by this SEBI's virtual assistant, that is Seva. So this can be accessed in the SEBI investor website. So if you want to access this Seva, that is it is available in SEBI's investor website and also in the Sarthi mobile app, which is present both in the Android and iOS platform. So remember, here is that SEBI chatbot is called Seva. This is the point to be taken from this. So next is that Shriram Group gets RBI approval to enter into the asset reconstruction sector. Now what is this ARC? You know that these are the companies that buy bad loans from the banks. And then these bad loans are collected by the ARC from the borrowers. So that banks can concentrate on their lending businesses. This is the reason for introducing ARC. So they buy the bad loans and they collect the money from the borrowers, and so the banks can now concentrate on the lending business and other business. They don't have to concentrate on this NPA, that is non-performing assets. So recently the Chennai Tamil Nadu based Shriram Group, it has obtained approval from the Reserve Bank of India to enter the asset reconstruction sector in the financial year 2025. So if you see Shriram Finance Limited, it is an NBFC. And it has projected a 15% growth in asset under management for financial year 25. And if you see, the net owned fund for asset reconstruction company is, as of 2022 it was 100 crores, but it has been increased by the RBI that as on March 31, 2024, the ARC have to maintain a net owned fund of 200 crores, and by March 31st, 2026, they have to maintain 300 crores of as a net owned fund. So next is about the bank assurance. So ICICI Lombard and Karnataka Bank has announced bank assurance partnership. So now the ICICI Karnataka Bank will be able to provide health insurance, motor insurance, travel insurance, all these type of insurance to its individual as well as the business customers. So if you see in 2002, the IRDAI has opened the bank assurance channel for the insurers to increase the insurance penetration. So by combining this insurance pack, there will be a lot of customers who will have access to this insurance. So that a lot of people will obviously come to the bank, but a lot of people may not visit the insurance firm. So when an insurance firm has a pact with a bank, then it will be easy for them to sell the policies to the customers, and customers will also have a wider knowledge about the available insurance policies in the current scenario. So this is the main reason for this bank assurance. And also IRDA is planning to achieve insurance for all by 2047. So next is about a GDP projection. So the National Council of Applied Economic Research, that is NCAER, in its recent July report, it has stated that the GDP will grow in the range of 7 to 7.5% in the financial year 25. The main reason to make this good projection is that due to normal monsoon and also the strong bank credit growth. So these are the main reason it has made a good projection of 7 to 7.5%. And if you see the other projections, IMF has projected 7%, ADB has also projected 7% for the financial year 2025. The CPI projected was that CPI, if you see the CPI headline inflation, it has increased from 4.8% in May 2024 to 5.1% in June 2024. While the core inflation, it has remained unchanged at 3.1%. Core inflation is nothing but inflation minus food and fuel. So when you subtract food and fuel from the inflation, then you arrive at core inflation. So the core inflation, we have been maintaining the core inflation with lesser than 4%, but the headline inflation has been over 4% for a long term, mainly because of food and fuel. But now the fuel is not contributing much to the inflation. It is the food that is contributing a lot to the inflation. The food prices are highly volatile, and that is the reason we are not able to come closer to the 4%. And similarly, the wholesale price index increased from 2.6% in May 2024 to 3.4% in June 2024. Next is that Insurance DECO enters into the reinsurance broking sector with composite license. So we saw it in the first news that composite license means you will be able to do both the direct insurance as well as the reinsurance. So until now, this Insurance DECO had direct insurance where it had sold, health or life. All this had been sold by this Insurance DECO. Now it has obtained a reinsurance service also, and so for that it had obtained a composite license. So Insurance DECO, a Gurugram based insurance marketplace, it has received the composite insurance broking license from the IRDAI. This license allows the firm to offer reinsurance broking services along with the existing insurance broking services. So there is already this direct broking services already applicable to this Insurance DECO. Now reinsurance also can be provided by this Insurance DECO. So if you see, it has direct integration with 48 insurance companies offering over 630 insurance products. So similarly, if you see, in February 2024, PB Fintech Limited, which is a wholly owned subsidiary of the Policy Bazaar, it received the composite insurance broking license from the IRDAI. So remember, it is PB Fintech of Policy Bazaar. And now it is Insurance DECO. So the CEO of Insurance DECO is Ankit Agarwal. So next is also about a GDP projection. So if you see the India Ratings and Research, it has upgraded the India's GDP forecast to 7.5% from earlier 7.1%. And this 7.5% exceeds the projection of or expectations of RBI, Economic Survey, IMF and also ADB. RBI had projected 7.2% And as per the Ministry of Finance, it had projected 6.5 to 7%. And we saw IMF and ADB had projected 7% each. So this expectation or this forecast is more than all these forecasts. And the gross fixed capital formation is expected to increase by 8.9%, though it is slightly lesser than 9% that happened during the financial 24. So gross capital formation is when you invest in this capital assets like, infrastructure, highways. So all these are capital. Also, when you invest your money in this capital assets, then it's called as capital formation. So here it is expected for this financial year, it is expected to increase by 8.9%, but last year it had increased by 9%. The physical deficit target of 4.9% in the financial year 25 is expected to be achieved. So this financial year we are expecting to achieve 4.9% of GDP. Now tell me in the comment section that what was the physical deficit target of financial year 24 and how much did we achieve? So CPI inflation is estimated at 4.5% for the financial year 25. This is also the RBI's projection. RBI also projects the inflation for this financial year to be 4.5%. So this is in line with the RBI's projection. And the wholesale price index is expected to be around 3.2% for the financial year 25. Similarly, if you see in case of Moody's ratings, the GDP projection is 6.8% for 2024 and 6.5% for 2025. And the Singapore-based DBS Bank, it has projected 7% for the financial year 2025. So India Ratings and Research, it is a 100% owned subsidiary of the Fitch Group. The MD and CEO is Rohit Karan Sahni. Next is about the RBI's Digital Payment Index. It has increased by around 12.6% year on year. So this index, if you see, it is released twice a year. So here this according to the March 2024 data, but released with a lag of 4 months. So every year it is released twice with a lag of 4 months. So now if you come, the last data was of September 2023. So the data was of September 2023, but it was released in January. If you see the Reserve Bank of India's Digital Payment Index, it has increased to 445.5. So remember this is very, very, very important. It is 445.5, the current Digital Payment Index, an increase of 12.6% because in March 2023 it was 395.57 and September 2023 it was 418.77. So as per the latest data, before this 445.5, it was 418.77. So this RBI Digital Payment Index, it measures the adoption and extension of the online transaction across India. So this was introduced in January 2021, with March 2018 as the base year. So this is used to calculate the digitization of payment across India. So similar to this, there is also one more index called Financial Inclusion Index. This has 3 parameters, that is access, usage and quality. And quality, it has 45% weightage. Access, it has 35% and quality, it has the remaining 20%. So remember all these index and all. So recently also the financial index for March 2024 was released. Tell me the value of this financial inclusion index as on March 2024. So there are, for this digital payment index, there are 5 parameters. So they are payment performance, that has a weightage of 45%, the highest weightage, that is payment performance is in the sense like UPI is there, right? Or net banking service, all these are there available for the customers. But if the performance of this of these services are not good, then the customer will not be will not be having an enthusiasm to come over and use it again. So this performance has to be really good. It should not have any errors or it should not have any downtime. Then it will encourage the customer to use it again and again. So it is very important to have a good performance of the services that is provided by the various banks or the fintech companies. So that is why payment performance, the highest weightage is provided, that is 45%. Here next is consumer centricity, that is the lowest weightage given, that is 5%. Here it involves like consumer education, consumer awareness, all this, like if any complaint that has been raised to the bank has not been resolved by the bank, then the customer can go to the banking, to the Reserve Bank's ombudsman. So all this has to be made aware to the consumer. That is what is this consumer centricity. This has the lowest percentage, that is only 5%. Next is payment enablers. So this is like mobile, bank accounts. All these are payment enablers because only through this we are making payments. Only through mobile you can make any UPI payment. So that is why they call us payment enablers, and here it has weightage of 25%. And payment infrastructure demand side, it has 10%, and payment infrastructure supply side, they have 15%. So demand side you have debit or credit cards, all this will come under demand side, and supply side if you have branches or business correspondent or ATM. So you have to have this supply is required, right? Only if you have branches or business correspondent, people will come to the branch or business. If you don't have supply itself, then how can customers come and provide or use their financial services? So this is the payment infrastructure supply side. So remember, they are payment performance, consumer centricity, payment enablers, payment infrastructure, demand side, and then also supply side. The highest has been provided to payment performance, that is 45%, and the lowest is consumer centricity. Do remember the other three parameters weightage also. So next is that SIDBI partners with C2 Trades and Ergo Capital to facilitate loans to the MSME sector. So SIDBI, it has partnered with C2 Trades and Ergo, and this is to provide loans to the MSME sector in an easy and in a less hassle manner. So what is this C2 Trades? This operates under the TREDS, that is Trade Receivables Electronic Deliverable System. So you know that there is a TREDS platform that was introduced by RBI. Here you have an MSME seller, there will be a buyer, there will be a financier, and there will be an insurance company. Okay, these are the four participants of these TREDS. So here what happens is that MSME seller would have sold some product to some buyer, and the buyer would have told that I will give you this money after 30 days. Say that some MSME seller has sold some machine which is worth of 1 crore. Say it is 15 lakhs, sorry. So 15 lakhs. Now this buyer will tell I will give transfer this money after 30 days. But the MSME might be in cash crunch. It might need the money immediately. So what it does that in this TREDS platform, MSME seller will provide the bill to the buyer. Okay, this bill will be provided to the buyer. The buyer will check the details. Okay, that all the details are correct. Then the buyer will accept the bill. So provide the bill. Next, the buyer will accept the bill. After accepting the bill, now the financier will tell that okay, I will check the details. It will check the details and it will tell that okay, I will provide you the loan, or I will provide you the money. Sorry, I will provide you the money. That it will provide the money to the MSME seller, and then after 30 days, this financier will collect money from the buyer. So this is how this TREDS platform works. This will help the MSME to get the money immediately. So the C2 Trades provides such a service to the MSME sellers. So it is a platform. It works under the Trades, allowing MSMEs to get early liquidity within 24 hours through an online bidding process, utilizing a fully digital end-to-end solution. So C2 Trades, it is a part of Trades platform, and here it is nothing but a platform where all the MSME sellers and buyers, they come together. Here very important thing is that a seller, it has to be an MSME only. Only MSME sellers can participate, but buyers can be anyone, like even corporates can be a buyer. But a seller, it has to be only an MSME seller. So C2 Trades, it's a platform that provides this service. And it is an initiative of C2FO. So C2 Trades, it is an initiative of C2FO. Now C2FO, if you see, it is a world's on-demand working capital platform. So C2 Trades, it is an initiative of C2FO. So if you see C2FO, it has supported nearly 2 million business worldwide with fast and flexible low-cost capital. So by this SEBI will now able to do MSME promotion. It will also ensure increased credit flow and also support the timely realization of the MSME receivables through the TREDS platform. So by this SEBI collaboration, more credit will be provided to the MSME and also in a even more faster manner. So remember, it is SIDBI, sorry, it's not SEBI, it's SIDBI collaborated with C2 Trades. Remember the name C2 Trades. Next is that you grow capital. So you grow capital, it's a data tech NBFC, that is non-banking financial company. It has also leveraged, it has also made a partnership with the SEBI so that it could provide more finance solutions to the MSME. If you see, currently it has extended finance solutions to around 78,000 MSME. So currently, YouGrow Capital has providing finance or is providing finance to 78,000 MSME, and through this collaboration with SIDBI, it will be able to provide to even more number of MSMEs. So this is the main reason for the collaboration. So it is SIDBI with C2 Trades and YouGrow. Remember these two names, and it is with SIDBI. Next is that Rapido becomes unicorn with fresh raising of $120 million. So if you see, the Bangalore-based startup called Rapido, it has achieved a unicorn status after raising a capital of around 120 million in its latest funding, and it has raised this amount from its own investor, that is Westbridge Capital. So from Westbridge Capital, it has raised $120 million. So by this, Rapido becomes the fourth startup in the India to reach the unicorn status in 2024. So the other three are Crutrim, Perfoys and Porter. So these are the other three, that is Crutrim, Perfoys and Porter, and the fourth one is Rapido. Do remember these four names, very important. There are high chances of asking in the examination. The next is, what is an icon? So what is a unicorn? So unicorn is they are privately owned startups whose valuation is more than 1 billion. So if the valuation is more than 1 billion, then these startups are termed as unicorn. So according to the latest Hurun Institute Global Unicorn Index, India is ranked at the third position with 67 unicorns. So as per this Global Unicorn Index, we are at the third position. The first position is occupied by US and the second is by China. So next is that RBI has revised this domestic money transfer framework. Now what is this domestic money transfer framework? For that, you have to know about a notification that was released on October 5, 2011. So if you see, according to the RBI notification dated October 5, 2011, a walk-in customer at a bank branch can remit funds up to rupees 50,000 to a bank account of a beneficiary through NEFT. See, suppose I am a customer A, I have entered this bank B, but I do not have an account in this bank. Okay, now I want to send money to bank C. Okay, I have some urgency and there's only this bank being close to my house. So what I do is, I go to this bank, I give 50,000 to the bank employee and tell that person to transfer it to this bank C. So, a NEFT transfer is done by this bank employee. So here if you see, my details are not provided. I haven't provided my account. I have only provided my cash. So this is a payout service, cash payout service. So here in this case, if you see, a remittance of maximum only 50,000 can be done using cash. And also this is in the case of a bank. In case of a business correspondent, it is a maximum of 5,000 per transaction and a monthly cap of 25,000. So remember, if I want to send using NEFT, I can do it, but only up to 50,000. I will provide that cash to this bank B employee and tell him to send it to a bank C customer through NEFT. And only up to maximum 50,000 can be provided as cash by me to the bank B employee to send it to this bank C customer. So what changes have been brought? So if you see, RBI has made this know your customer requirements more stringent, and this change will be come into effect from 1st November 2024. So as I told you, right, in that case, cash pay-in service. So when you want to go, you visit the bank, you tell them to send 50,000 to that bank C customer. It is called as cash pay-in services. So here in this case, the banks and the business correspondents, they will be required to register the remitters using a verified cell phone number, a certified official valid documents as per the KYC norms. So I am person A. So I have told the bank to send this 50,000 to that bank C. So now I am the remitter, right? So I have to provide my document, OVD document and my phone number to the bank. So bank has to take all this in record, has to register all these details or has to note down all these details of this remitter in their records. Other one is cash payout service. Now there is a called bearer check. There's something called bearer check. So if I hold this bearer check, I can go and get the cash directly from that bank. You don't have to transfer it to my account. I can directly encash the check. So as per the new norms, the remitting bank will be required to maintain the records of the name and the address of the beneficiaries. So my name is mentioned in the check. So you give this pay A. So I go to the bank of this check and then collect the money. Okay. Now this bank will have to maintain my name and my address details with them, because I am the beneficiary. I am encashing this check, and this bank has to ensure that the name and the address of this beneficiary is maintained with them. Next is that remitter bank should include remitter details as part of the IMPS and NEFT transaction message. Know that while making a NEFT transaction, there will be a message, a transaction message that will be there for you to type. So you can type any message you want, and that message will be delivered to the beneficiary also. Now what bank is that even the remitter details has to be part of this message, so that the beneficiary knows that who has sent the money to him or her. So the remitter details should also be present as part of this transaction message. And if you see this, all conditions or all these new things are not applicable to the card-to-card transfers. So card-to-card transfers are excluded from the purview of this money transfer framework. So I hope you understand. Here is that all in case of pay in service, the OVD document and phone number should be noted down, and in case of cash payout service, the name and address should be noted down. And in case of remitters, the remitter details should be present as part of this transaction message. Now, moving to the next news. SEBI has launched India's first web portal for passive funds at NSE. There are two types of fund. One is active fund and one is passive fund. Active funds, the mutual fund manager will continuously and actively sell or buy the stocks from the market. But in this case of passive fund, it will mimic an index. There will be an underlying index, and that will be mimicked by this passive fund. So whatever stocks are there in this index, the same stocks will be there in the passive fund, and also the weightage will also be more or less the same. This is the case of a passive fund, and the mutual fund manager's role in this passive fund is quite less compared to this active mutual fund. So to track this passive fund, to know various details about this passive fund, a web portal has been launched by the SEBI. The primary objective to launch this website is that to provide important information and also for the investors to evaluate the passive fund industry and also the various products provided by the passive fund industry. For this reason, this website has been launched by the SEBI chairman. And according to the website, if you see Nifty indices, it serves as the benchmark for 145 exchange traded funds listed in India and for 16 exchange traded funds listed outside India. For these many ETF, Nifty indices serve as the benchmark. And the website name is that indiapassivefunds.com is the new web portal that has been launched. And if you see the website, it also shows that the total asset under management for passive fund is 10 lakh crore, and out of this 10 lakh crore, 7 lakh crore ETF and remaining 2.53 lakh crore is an index fund. So remember, it is 7 under ETF and 2.43 as an index fund. So the first passive fund was launched in 1999, and at present there are totally 430 passive mutual funds. And apart from the website, SEBI chairman has also launched a report that is titled as Indian Capital Markets Transformative Shift Achieved Through Technology and Reforms. So this report is developed by the NSE Data Analytics. Remember the name, Indian Capital Markets Transformative Shifts Achieved Through Technology and Reforms, and developed by NSE Data Analytics. So it had highlighted 5 important reforms: T+1 settlement cycle, introduction of T+0 on option basis. We know that if the trade execution happens today in T+1, then the settlement of shares or the exchange of shares will happen the next day, T+1 day. In case of T+0, the trade execution and the settlement of shares happens on the same day itself. This is the T+0. T+1 is currently the Indian market is working on is running on T+1 settlement cycle, and this T+0 is being implemented into the top few market firms, and is also implemented on an optional basis. Next is that application supported by blocked amount for secondary trading. Now what is this ASBA? So this is now applicable in case of IPO. So you have applied for an IPO, but the allotment comes after 2 or 3 days. So in that case, this amount that you have applied, right, for the IPO, say it is around 15,000, it will be locked in your account. You can't use this money. It will still lie inside your account, and only after this IPO it has been allotted to you, or if any IPO allotment has been succeeded, then only this amount will be debited from your account. This is the application supported by blocked amount. So they are planning to bring this for secondary trading also. Next is collateral segregation. This refers to the procedure that enables identification and protection of client collateral from misuse by trading or clearing member. You know, recently, maybe 1 year back, there was a news about the Carvi broker. So what that broker had done is that it had misused the collateral of the customer, of its client. It has pledged this collateral, it had pledged the shares of the client as collateral, and it had got loans from few bank or NBFC for their purpose. So it had misused the shares of the client. It had used them as collateral. So in order to protect the client collateral from misusing, this collateral segregation was introduced. Next is two-way portability among clearing corporation. This is to provide business continuity in case of any software failure in the risk management system. Even if there is any software failure, this business has to continue, right? So for that, this two-way portability was introduced. The last one, that was the establishment of investor risk reduction access platform. Investor risk reduction access platform. We all know that via a stockbroker only, we buy or sell shares in the stock exchange, right? So stockbroker provides us the services to access the shares in the stock exchange. What if some technical glitch happens and the stockbroker is not able to provide such services to the clients? Maybe it happens to all stockbrokers. There are some A, B, C, 3 stockbrokers, and all these stockbrokers are not able to provide this trading services to the clients due to some technical glitch. In that case, this investor risk reduction platform will be activated, so that clients can go and buy shares in this platform via this platform. So if you see, it is a common cloud-based platform jointly provided by all exchanges to investors when trading services of the stockbrokers are affected due to technical glitch and unforeseen outages. So this is introduced when the technical glitches and unforeseen outages are observed in the stockbrokers. So IRRA will be activated only in case of an unforeseen contingency. So when the stockbrokers fail, in that case the IRRA will be able to provide. That is, in the fail in the sense when there is a technical glitch, in that case this IRRA will be activated and the trading services will be provided by the IRRA to the clients. Thank you for watching the session. I hope you had enjoyed it. We're also available in Telegram under the name AffairsCloud_official. We also have an Instagram handle. Apart from this, you can contact us directly on 9677333862 regarding any courses that we offer, or regarding any payment issues. You can contact directly on this number. Thank you.